Hello and welcome back. So we have a very, very good episode for you today. Everything from where we're at with Bitcoin, also a lot of concern that we're seeing, from Bitcoin miners. Miners are going to be the biggest issue for us. The next stage of capitulation is here, and it's going to come from the miners. Anyway, just quickly, AJ, how are you? It's good to have you back.
Thank you. Yeah, I'm doing well. It's the best I felt all week, so that's a good sign.
There we go. That's good. Yeah. I know you went to hospital and stuff and didn't feel too good. So we are all sending our prayers for you.
Yeah, thank you very much. I'm back and better than ever, hopefully. So let's get this show on the road.
There we go. So we're starting off here, as you can see. Not much happened over the weekend, guys. There wasn't really anything to report, to be honest. Just a little bit more continued downside, away from these kind of higher levels at the RSI and stuff like this. So we're moving back down. And as you can see, the only thing to get excited about, I guess, was Dogecoin earlier, towards the end of last week. But that's now down almost 10%, really. So this is kind of where we're at. It's kind of not, it's just a bit boring, isn't it, AJ?
Yeah, even when I was away, I was keeping up with the chart. I was trying to keep up with the charts here and there, and nothing really happened. I know I spoke about it on the earlier live today. We did miss one trade, unfortunately, because I was ill, but nothing happened. Nothing happened at all over that week. The price just continued to move sideways and stay within that range that I was talking about on the video just before I had to leave because I was ill. So yeah, it wasn't very exciting at all. But obviously, we'll get on to the technicals in a bit.
Yeah, but I mean, the next thing that we're kind of looking at here is Bitcoin miners, right? So look, have a read
Yeah,
through this. Miners do not work in full force. If they have efficient, new generating mine machines, they can put them into work, but that's all. Essentially, energy prices are high, and even miners, they're not making money. You're
no.
mining Bitcoin, and it's only worth like 16 grand. And difficulties getting higher and higher. It's just a very tough environment for the miners. So
It
overall, we
takes
are
it
going to
takes a
see.
lot of energy to mine a Bitcoin.
Oh yeah,
I'm sure it's
ton.
costing them a lot. I'm sure it is costing them a lot of money.
And yeah, especially when you look at oil being at like $100 a barrel and everything like
Yeah.
this. It's yeah, it's awful. And so I think the next level is we are going to see a big capitulation event from the likes of the miners, just not really being too excited, especially when you do have difficulty at near an all-time high. So things are getting very difficult. It's unlikely that you're going to solve the algorithm and get the reward. So why try? Is I think that the main thing that people are looking at. So we are seeing, Wales had a little bit of a sell-off. We're seeing the opposite story, really, actually, when we're looking at smaller wallets, the shrimp and the crab in the crypto world, because they're hitting a record high. We're seeing that a lot of small time investors. Say small time, they're not really small. Anyone holding over a full Bitcoin is relatively substantial, shall we say? But we are seeing that these account balances for the shrimps, also crabs, are increasing. So there is this general trend which actually is looking quite good. And I'll bring up this so you can see it on Glassnode.
Yeah.
Maybe get a
This
slightly
is
closer look.
this is all good, and I do think this is really good, but I do see the negative side of it as well. If we are going to have this final capitulation towards the downside, as you said, miners are selling. Miners can't afford to keep their Bitcoin right now. The Bitcoin that they're making, they can't afford it to afford to keep it, so they need to sell it. But we are, as you said, we're seeing these shrimps, these crabs, we're seeing those buy up the Bitcoin. The only worry I have is that if we do have this last capitulation event towards the downside, maybe down to 14,000, 12,000, maybe even 10,000, are these shrimps, are these crabs going to continue to buy, or are they going to panic sell into the market, causing, adding to the cause of that final capitulation event towards the downside? That's, the only
Yeah.
worry I see, because a lot of these smaller holders, They tend to buy and sell a lot more often than bigger
True.
holders. So, we have to, I guess, look at the institutions as well and the bigger investors and see what they are doing as well.
Well, and just quickly, who do you think are the buyers at this, at this point? Is this going to be like someone new, or like just someone who doesn't have a lot of Bitcoin yet?
Yeah, that's the question. And for me, I feel like it's both. I feel like new people are going to be coming in, but also I think people that just don't have a lot of Bitcoin are also going to be buying it up as well. So I guess that's a hard question to answer.
Yeah,
But yeah, it does worry me a little bit. Just if we do have this capitulation event, are these shrimps, are these crabs strong enough to hold their small amount of Bitcoin? Because potentially this is their life savings. So it
true,
does worry
true.
me very slightly.
Yeah, especially if you are, like someone who saw it, you might have seen it at 60K and thought, Jesus Christ, that's amazing. I
Yeah,
need to buy it. And now suddenly we're at these levels of like, 15, 16. Everyone is probably very excited right now, but
yeah,
there's no reason why we're not going to see a drop down to that 12K, even 10K level. I think
yeah,
the most popular call I've heard is for between 14 and 12.
yeah.
That's what I've kind of seen. But you did mention earlier, what we need to do is have a quick look at the big institutions. Do you want
Yeah.
to go through this, AJ? Have let everyone know what we're looking at. Obviously,
I'll
here
let
are the
I'll let you
providers.
do that. You'll probably be better at going through that than me. I'll let you do
Yeah.
that.
Okay. All right.
Yeah,
So one thing to notice here, Grayscale. So Grayscale did see weekly inflows, only very small, 0.2 mil. Not very much at all. But overall, we're seeing people taking money out of crypto. Big institutions. This is okay. Just in case you guys don't know, this is the digital asset flow of institutions into crypto. Obviously, we're talking about the FTX collapse. That's something that is really one of the I guess maybe the fallout is more so because FTX was quite retail focused, but I think we're going to see now a lot of the big institutions just get a little bit worried. Okay, so what we saw overall was people taking money out of Bitcoin, out of Ethereum, out of Binance,
yeah,
and also out of XRP and Polygon. A little bit into Solana. Maybe that's just a chuck in a little bit and see what happens because it's so
yeah,
cheap, so cheap. But shorting Bitcoin was up. So if we continue this kind of track record, I anticipate that we're going to see even bigger legs to the downside coming up later this week. And the countries of which we saw this: Switzerland, 24 million, sorry, and then Germany and the US were the only ones to be kind of really putting a little, any money in, apart from France,
yeah.
but doesn't really count. Um, so yeah, so overall, as you
It,
see here, digital asset investment products saw outflows totaling 23 million, which is really not great.
no,
Really, really not.
this is a worry I have. The institutions are the ones that drive the market. Whatever they're doing, the market is the majority of the time doing that.
Yeah,
They are the smart money, and seeing these shrimps and these crabs buying up now is very good. Yes, I think keep buying. It's very very good. And that's what I'm going to be doing as well, buying it as the price is down at these prices. But the issue is with institutions selling, as you can see right there, on the weekly outflows, a lot of Bitcoin is being sold by institutions. Now, what do they know? What do they know that we don't?
yeah,
It looks as though they think the price is going to go down even further than it already has, and the shrimps and the crabs, if they're buying now, then there's a very high chance that if we do get this next leg towards the downside, they are going to panic sell and they are going to drive the market even lower as well. So maybe the bottom could be at 14,000, 12,000, but we could have a scam wick towards 10,000, because we're seeing these shrimps, we're seeing these crabs sell as well because they are panic selling. So, yes, we have the largest amount of largest amount of shrimps and crabs buying. But for me, it's still worrying because institutions are selling, and there's a lot of FUD out there that we are going to go lower. So, for me, shrimps and crabs, they're not as strong. They're not as
And they don't
strong
have
as the
as much of an
institutions are
influence.
holding. They don't have the risk. They don't have the risk that institutions have. The risk for a shrimp and a crab is a lot bigger than a risk is for an institution. So there's a higher chance that they are going to panic sell, and it's not going to be good for the market at all.
Yeah, exactly. Especially if we see the likes of miners now also begin to sell
Yeah,
as well. We could have the stars kind of lining up here, pretty much like against us in the
yeah.
worst way possible as well. But anyway, so I want to move on, just continuing this kind of story about institutions. So looking at stagflation, okay, this is all you're going to hear next year, especially towards the end of this year. This is all that we are going to hear about is stagflation, how the Fed are going to actually manage this itself. So what is stagflation? It's an economic cycle characterized by slow growth, high unemployment, accompanied by inflation. Now, okay, the Fed have always tried to make sure that we have high unemployment. They are trying to slow growth. Now, the difference between like a recession and stagflation typically is this inflationary, part here. So this is why the Fed is really trying to get out of stagflation and into a recession. So it kind of seems like we're now focusing, trying to get that recession, trying to get it to like actually work. Because it's not a matter of if now, it's just a matter of when and how far, like, does it go even further than a recession? Because stagflation is so much worse for the economy because you still get inflation and people can't pay for anything, but because like no one can pay for anything, but there's still high unemployment. We get inflation as a result of low unemployment and high growth because everyone's got the money printer on. You know, so if you get inflation and all the negative effects of growth, then yeah, you're in some really really bad waters, and this is what people are kind of looking at. So this is why we're going to see this more and more inside the mind of what's going on of the institutional investor. You can see this here: stagflation fears, stagflation 50% for a professional investor, 44 for retail. Deflationary recession seems to be the next most likely. A Goldilocks growth. I mean, look, retail investors are obviously a little bit more hopeful, should we say? And then runaway inflation and strong growth, 7 and 6% respectively for professional and retail. But overwhelmingly, I should say, we're looking at that stagflation story really being the biggest part of it. Now, we are also expecting a weaker dollar further a month from now. So this is where we're saying, look, we're looking for last month. People were expecting a higher than now. Now we're kind of seeing that a dollar would be potentially lower. So we're not expecting that crazy DXY strength, which is good for Bitcoin, but we don't know exactly if we're going to have like a proper, should we say, if this is going to continue. And just finally here, US stocks in 2023, how do you expect the S&P to finish? Up by 10% or more, plus 10, minus 10. So we're pretty much, the same on down by 10. So we're not expecting any crazy returns next year. Pretty much just kind of some being like, oh, we might drop a little bit, some being like, oh, we might grow a little bit. So it's going to be quite tough for Bitcoin to really stand out, and it has to do something pretty crazy to get some returns. What are your thoughts, AJ, on just the general stock market and the wider
Well,
traditional markets, should we say?
to be honest, the stock market isn't actually doing too bad right now. It is actually holding. It is holding up, and it
Yeah,
is for me
almost
staying
decoupled.
inversely. Yeah, exactly. Decoupled from the crypto market, but well, the crypto market is decoupled from the traditional market, I would say. But also, I would look at it as the traditional market is actually still inversely correlated to the DXY, which, again, we're not seeing that with Bitcoin anymore. We've seen their DXY and Bitcoin's inverse correlation sort of part ways, and now we are sort of seeing the DXY and Bitcoin actually become slightly correlated, because over the past 2 weeks, we've seen Bitcoin coming down, but we've also seen DXY come down as well. So Bitcoin right now has decoupled from the traditional market, but has also inversely decoupled from the DXY as well. So for me right now, the traditional market and the DXY is not the best thing to be looking at to sort of predict where the price of the crypto market could be going. But for me, the traditional market is actually looking fairly good.
Yeah, yeah, it is. It is. And I just want to quickly mention, in terms of, like, major recession, this is something that we're going to see more about again. I'll probably talk about it. I might do a specific video, but the spread on the 10-year treasury yields shrinks to almost 80 basis points, which is basically, the most inverted it's been. And this has always been a historical, really, really good sign of a recession incoming. So whenever they invert, we pretty much always have a recession straight after. And so we are looking at this now, and the inversion has become really, really bad, to the point that it's been the biggest in 41 years. So is there going to be a recession? Almost absolutely. But the question is it just going to get worse and worse? Now, what we're going to hear is, we're going to hear from Jerome Powell exactly how bad he thinks it's going to get on Wednesday at 10:30 my time, whenever it is at your time. That's going to be in the UK. It's going to be 6:30, I believe. AJ, is that correct? 10:30
Possibly.
mine. That means it's, yeah. So
Yeah, well,
so
I'm 4 hours behind. Yeah, so
yeah. So overall, we're looking at a little bit of news coming out of the European Union tomorrow and also the day after. So we got inflation from France, unemployment from Germany, GDP from Italy, inflation. As you can see, loads of stuff here going on. And then we do get GDP growth. I mean, I don't know when they're going to say, "Hey, look, actually, we're in a recession." It depends on how how this forecast, whether their growth comes in around forecast or not, because it looks like 2 quarters of negative growth GDP. I mean, look, you can see it on the screen. That, my friend, is a recession.
it's
Um,
uh, it's when they want to decide to stop changing the definition.
Yeah, exactly. Um, but
So
yeah, so if they come in above, then they'll be like, oh, we're fine, we're not in a recession. But then also,
yeah,
Jerome Powell is not going to like that. He won't like that. He's going to say, look, we're going to keep being quite aggressive for longer in his speech. But I will say, look, when let me have a look. Let me just see exactly when this comes out. So on the 14th of the December, we have the exact, you know, bomb. Are we going to get 75 basis point hike? Is it a 50? We don't know. We're going to get a bit of insight here on Wednesday, but I don't think we're going to get too much, because we've got a jobs report coming 2 days later, and also we have another CPI report, and we have a PCE report. So there's going to be so many different numbers coming out over the next maybe 10 days or so, that Jerome Powell, whatever he says here, probably won't hold too much weight, because it's not really going to mean a whole lot when we have PCE and also manufacturing and also non-farm payroll. And so, I think that, he's going to be basically judging whatever happens on those 10 days after he comes out and says whatever he says here. So I'm not expecting a catalytic event, from Jerome Powell here, but it'll be interesting to see what happens in Europe, and if that guides Jerome Powell, and if we see any strength in the DXY for a very temporary, maybe a day or two, because there's a lot of uncertainty here.
yeah. From a fundamental side of things, I think this is why we're not seeing the market move at all. We're just seeing this. We'll look at it on the charts in a moment, but we're just seeing this sideways price action. Is probably, we have a big week coming up. A lot is happening. What's it is it this week and next week that it's all happening?
Yeah, yeah.
Yeah, this
This week and next week, yeah.
so we have the 30th, and yeah,
Then
to be
2
honest,
weeks
I have
after, on the 14th, we then have
the FOMC. Yeah,
yeah.
So we're having a lot of volatility that's going to be coming in, and I think that's what the market is waiting for. I think that's why we're not seeing much movement at all. So we could expect this consolidation towards the consolidation sideways until we get this data coming out, and then finally we might start seeing the market move. But yeah,
Yeah. Well, let's have a look at the technicals then.
yeah, okay. Well, let's start off with the DXY and Bitcoin, because that's sort of what I wanted. I just wanted to show an example quickly. But so the start of November, so around here, was the start of November, and ever since the start of November, we've seen the DXY pull back. We've broken major support here. Where have we gone to? The next major support level. We bounced off that level. We've come down and tested it again. We are testing this major level again. Once again, major support back here previously, major resistance here as well. So this is a major level that we're at. But initially, what I want you to look at here is that the price of the DXY has been pulling back over the course of November. If we come and have a look at this chart, so let's have a look at let's go to the daily chart on the Bitcoin price action chart. And as we can see, since the start of November around here, we had a little push towards the upside, but initially over the course of November, we have seen the DXY pull back and push towards the downside. We are getting a slight period of consolidation here where some sort of descending triangle pattern is forming, and we're sort of getting a similar chart, similar looking chart on the DXY as well. We had at the start of November a slight push towards the upside, and then we've had a pullback, and we're forming some sort of pattern here potentially. Some sort of triangle pattern, falling wedge pattern. Potentially on the smaller time frames, but they're looking very, very similar. Bitcoin and the DXY are looking very similar right now. And for me, they were inversely correlated, but now they're not. They're looking more correlated than actually inversely correlated right now. So yeah, right now the DXY is not really a good chart to be looking at to sort of indicate where the price of Bitcoin could be going. Well, if we see the DXY pull back, we could say that that Bitcoin might continue to pull back as well. Who knows? But right now, the
I think
DXY.
I
Sorry.
was just gonna quickly add on, so like the key takeaway that I get from this, and even though it is looking a bit crazy and nothing, it doesn't entirely make sense, what's going
Mhm.
on with the DXY, but the overarching story that I'm taking away is that we're seeing, maybe less yield on bonds and things like this, dollar getting weaker. And as the
Yeah.
dollar gets weaker, I think this is going to be slightly better for, people moving into stocks and maybe slightly more risky assets as opposed to just, going into bonds.
Yeah. Yeah.
So that
Yeah.
might give
That's
us a bit of a push in towards tech stocks or something like this.
definitely. Yeah.
Hopefully.
Yeah, and definitely, and as we said, the stocks are actually doing fairly well. This is the S&P 500, and as you can see, we've actually been pushing towards the upside rather than pushing towards the downside. We've got a major resistance level above us, yes, but we've got a strong support level below us here as well. But yeah, stocks are looking good. But for me, right now, technically, looking at just solely basing my analysis off the technical analysis, Bitcoin is not looking good for me at all. So, as we can see here, we've got this just sideways consolidation. And this is a trade we actually missed here. I walked through it on the live earlier today, so watch that if you did miss it. But this was along here that we did actually miss. It would have been a really nice sort of 25+% trade, but unfortunately, I was ill during that entry, so it's a bit annoying. But there's going to be thousands more trades in the future, so there's no need to dwell on just one trade. But yeah, just looking at the technicals here, coming down into the 12-hour. We're forming some sort of potential continuation pattern here, or just another descending triangle, which it's looking pretty textbook. We've got the tests of resistance up here, we've got the tests of support down here, and the volume is looking really nice as well. We are getting a decrease in volume, which is what we like to see within patterns like this. And then on the break towards the downside, or the upside, we want to see a nice big spike in volume. Now, there's a possibility we could break towards the upside of this descending triangle. Now, that's going to be bullish, yes, in the very, very, very short term, if we do not get bullish volume coming in, because what will happen is exactly what I said was going to happen back here with this descending triangle as well. We broke towards the upside. Everyone was getting really, really bullish, but I was telling you, no, I'm still bearish because there's no bullish volume coming in. Then what happens? You know, the Bulls decided they did not want to take control. So what happened was the Bears took control. And as you can see, this massive spike in bearish volume here, where the Bears took control and pushed that price down. The Bulls tried to fight back, but there just wasn't enough volume. And we continue to push towards the downside. So for me right now, we're just going to have to wait and see what happens with this pattern. I'm expecting lower, reasons being we've broken major support on the weekly on the weekly time frame. We broke a major support. We've done this back here. So we did this back in May, sort of towards the end of May. And what happened was we saw the price come down to the next major level. The next major level from where we've broken this major level here. So the major level we broke was around $18,800. The next major level below that is $12,000 with a bit of support coming in at $14,000. So for me, the next level that I'm looking at is still $14,000. If we break $14,000, then $12,000, potentially a wick down to $10,000. So that's still the thesis that I'm looking at. That's still what I expect to happen, unless we can get a big spike in bullish volume. If we can't get that, then we are going to continue to see Bears stay in control and push the price down. So for me right now, I'm sitting on the sidelines. Yes, I've still got this short position open. As you can see right here, 120% in a profit, almost 0.1 Bitcoin in a profit here. We've already taken 0.086 Bitcoin profit, $1,400. So this was a really nice trade, but I'm still keeping 50% within this trade because I still think the price is going to go lower. And I like to put my money where my mouth is. If you've been following the channel, you will know that. So I'm keeping this trade open. But yeah, right now for entering any other sort of trades, any long trades, any more short trades, or just adding to that short trade, I am just staying away from that right now, sitting on the sidelines. As I said in the live earlier today that I did for you, if we do come into this area here below that value area low, and I get enough confluence telling me to enter a long, then yes, I'm going to long, and you will be the first people to know about that. Same if we come into the same goes for if we go into the value area high and there's confluence too short, then you'll be the first people to know about it. But right now, I'm just sitting on the sideline. Nothing too exciting is happening right now, and we're just sort of consolidating towards consolidating sideways. So right now, I'm sitting on the sidelines. Same with this chart here, the 12-hour chart, waiting to see what happens here. If we can get a break towards the upside, then great. But we need the bullish volume to continue that move towards the upside. If we don't, then the likelihood of it is the price is going to break out. We're going to roll over, come back down, break support, and see the price crash like we did back here. So that's what I'm expecting. If we break towards, same story. If we break towards the downside, okay. If we break towards the downside on minimal volume, then the likelihood of it is the price is going to reverse. The Bulls are finally going to take control and push that price up. Potentially coming back up to the high 17,000s, potentially all the way back up to 18,000 as well. But if we do break towards the downside on high volume, then I would expect that next leg towards the downside, and the next target I would have would actually be 14,000, because as I said, on this weekly chart here, the next major level, which is the monthly level that's been very well respected on the weekly chart, as you can see right here, is sat at 14,000. So still very bearish on the bigger time frames, but on the shorter time frames, such as the 1 hour and the 4 hour, I'm just sitting very neutral because as you can see, the price is just moving sideways, and we take advantage of this. We trade this. We long the value area low to the value area high, and we short the value area high to the value area low. Over the past 2.5 months, if you've been following the channel, you will know that this strategy has worked very well for us. We've made 9 trades, 8 of them were winning trades, 1 of them was a losing trade. But that losing trade, a few hours later, we turned that into a winning trade. We got stopped out. We didn't get stopped out. We hit our invalidation. and then a few hours later, we hit another shorting area, and then we made a really nice short from there. So, we've had a really, really nice track record, and I'm looking to continue this. But right now, I'm just sitting on this trade that I currently have because I'm expecting lower. And yeah, if there are any potential trades that I might be taking, then of course you will be the first people to know about it. So smash a like on this video if you want me to bring you trades and continue bringing you trades like this as well. Because yeah, I've been pretty spot on recently.
Yeah, he's on a roll, absolute roll. Love it. I love it. But yeah, so anyway, as he mentioned there, make sure you like the video, subscribe to the channel, and let us know if there are anything in it or any trades in particular or any questions you have. We'll get them ready for the next video. Thank you very much for watching, guys. See you tomorrow.
See you tomorrow, guys. Thank you for watching.